Welcome back. Time for Business here on Live from Paris with our business editor, Owen Fairclough. Hi there, Owen. Good to see you again. You're going to be starting with the growing emergency in the United States over the drought.
Catherine, we now have half of the US states officially declared in drought conditions. And while that may mean that they can tap billions of dollars of federal funding to help the farmers through this disaster, it's an indication of just how widespread and how big this problem is right now. The speed of it has been particularly cruel as well. Just weeks ago, US authorities were expecting a bumper harvest this year for US farmers. Now they're having to drastically revise down those figures with other countries as well. Export countries like Argentina suffering similar conditions. Many analysts are comparing this situation with the world food crisis of 2008. Siobhan Silk has more.
American farmers were expecting a record harvest this year. Now they're just trying to salvage what they can of their parched crop.
It's been getting close to a month since we've had any rain. We're still hopeful. If we get a rain in the next week to 10 days, it'll help somewhat, but the edge of the big yields is gone. That's no way to ever recover that at the present time now.
The Corn Belt of America is burning up.
This is the main area of the United States where all the crops are grown. Iowa, Illinois, Indiana, Missouri, Nebraska. We grow most of the corn and soybeans in the United States, and this is right where the drought is centered this time.
It's the worst since a devastating year-long drought that began in 1988 and resulted in billions of dollars in lost crops.
1988's the big one that we all talk about. 2012 is going to be probably going to surpass any of those and be the biggest historic event that we have in my career anyway. Probably on the verge of 1936, the Dust Bowl era.
With demand outstripping supply, American corn is at its highest price in almost a year. In the past month alone, it's gone up by a third. But because yields are significantly down, farmers still aren't making money. Consumers will likely see the difference at the supermarket till, but the effect could be worst felt by the world's poor. The US is the world's biggest exporter of maize. A failing harvest there is likely to drive up global commodity prices.
So as we heard there, we saw corn prices edging up on US markets at the end of last week. That's on top of a 30% and counting increase over the past month or so. On the Asian markets, a reasonable amount of optimism to start the week at least. Remember, there are going to be some big earning announcements out during the week, the likes of Goldman Sachs, IBM, Yahoo and so on. So investors looking forward to some of those. The Nikkei just a fraction up, no spectacular gains, and the Hang Seng around 0.25% in the green.
OK, so that's how the markets are starting the week. The French president is starting the week with an argument, isn't he, with Peugeot?
His first big battle against big business, Catherine, I think it's fair to say. This was François Hollande's reaction to Peugeot's announcement that it's going to shed up to 8,000 jobs over the next year or so. In one word, unacceptable. That was the president's reaction to that. He and his ministers will be sitting down with the unions through this week to try and see if there's some sort of alternative to these mass redundancies and the closures of some of Peugeot's most historic plants. The government has also employed its own consultants to try and draw up a strategy for the future of French industry, not just Peugeot, but companies like Renault as well, to see how their development can be mapped out over the next 5 years or so.
Yeah, a lot of people in this news fell last week. They were saying France needs to really look at the industry as a whole, don't they? Because this came as such a shock to them, such a lot of workers. But there isn't necessarily much that they can do about it at this point, is there?
And this cuts right to the heart of it. What can François Hollande actually tell Peugeot to do? Remember, it's a private company. This is not the case with the likes of Renault, that the government has a 15% stake in and is massively influential over what this company does. Peugeot is privately owned, so the government can't do an awful lot in dictating terms. Some unions say, well, yeah, the government could step in to stop these redundancies, but others are saying it's really a done deal now. What the government might be able to do as a compromise is try to limit the fallout, maybe making sure that one of the factories outside Paris that's due to close as part of this plan is actually used for car production in some sort, whether that might be just making components or some kind of supplies for Peugeot down the line. These consultants that are working for the government will report on the financial situation of Peugeot, though, at the end of this month, so we should get some more details then.
Okay, well, if the hammer's falling hard on Peugeot's French workers, the story's very different in one of their key emerging markets. Production's running at full capacity at Peugeot's Brazilian factory, and there are big expansion plans underway. France 24's Nicolas Ronson reports.
Northwest of Rio de Janeiro lies Porto Real and the factories of PSA Peugeot Citroën. Among its 4,500 employees, there's no sign of a crisis. 6 days a week, production lines here are working at full throttle, a mark of the company's faith in the Brazilian market. In October last year, the French group announced long-term investment worth €940 million. The aim to double production capacity in Brazil by 2015.
At the end of 2011, the production line finished here. Since the expansion, everything you see from here to there is new. All this was built in order to increase our production capacity.
To set the pace and make this site a touchstone for the company, Peugeot Citroën has appointed a young mechanical engineer as manager. At the relatively tender age of 35, Ana Isabel Fernandez is in charge of the 3,600 workers manning the assembly lines.
At the moment, we have a production capacity of 150,000 vehicles a year. At the end of the year, we expect to be producing 220,000. That means 40 vehicles an hour. And in 2015, we'll be producing close to 300,000 cars. Clearly, Latin America is a market where PSA wants to grow in a robust and sustainable way.
Yet the company's market share in Brazil remains a modest 5.5%. And with the country's economic boom sputtering, it will have to boost its fortunes even further if it's to remain a force in Latin America.
Okay, let's pick up on a few more of the day's company headlines for you now, starting with GlaxoSmithKline, which has raised its hostile takeover offer of Human Genome Sciences. According to Reuters, GSK is offering around $14 a share. That's $1 above its previous rejected offer that values the firm at around $2.5 billion. The two companies are collaborating on a treatment for diabetes, while GSK currently markets other drugs on behalf of Human Genome Sciences.
Citigroup is expected to address the scandal over rigging interbank lending rates when it reports second quarter results later on. The US firm is one of around 24 under investigation for the LIBOR fraud that's cost UK rival Barclays, its chief executive, and millions of pounds in fines. Now, Citi's CEO says he may seek permission from financial authorities to raise the firm's dividend to increase the token 1 cent per share it currently pays out.
And Nokia has halved the price of its flagship smartphone in the United States. The Finnish manufacturer is now selling its Lumia 900 for $49 on an AT&T contract. Nokia's share price has recently hit a 16-year low after a string of disappointing results, while the launch of the Lumia was ruined by a software bug. Interesting to note that Nokia were telling the FT that this is quite routine, really, to halve a price in order to stimulate market demand. But of course, it's bound to raise a few eyebrows with the company, as we said there, has seen its share price now down to €1.50. Sales absolutely decimated by the likes of Apple, and probably on course to report another disappointing quarter in its latest results, which I think are next week.
And Samsung seems to be hoovering up lots of customers for those handsets, doesn't it?
Absolutely.
Yeah, marching on.
Between them, Apple and Samsung have just completely left everyone else in the cold.
Okay, thanks very much, Owen, for that business roundup. That concludes this half hour of news here on Live from Paris. We're going to take a short break. There's Stuart Norvell's back in the studio for you. Don't go away.